let's move on to the next thing. And I think it's been
Sure.
bothering Indian investors for some time now, at least for the last couple of months, is a sell-off by the FIIs. Today, probably the FII ownership is, decadal or probably more, 12, 13 years low at 16.5, 17%. After the Trump trade, after the elections, there are a lot of hot money which accelerated out of India and even out of the emerging markets into the US. Would you be concerned about the FII sell-offs, or you believe that the domestic investor would support the market and will, be protected from the reasonable downside?
So two parts. Let's break this, and I'll touch the middle part of your statement first, which is decade low FI holding. The way I look at it is that that number is lower in percent because of the proportionate lower there into the Indian wealth system. One data point I was reading somewhere online a couple of days back, that fixed deposit to MF as a percentage to fixed deposit a decade was 5%. Today it is around 21%.
Right. Yeah,
So what
20%.
has happened is a lot of new money from the SIP perspective and non-SIP perspective have come into the market. The same money was not able to be matched by the FII. So it's very natural that as a weightage, their weightage will come down. So let's not look at that percentage in isolation. If there are 100 rupees in the table, you contributed 20 rupees, so you had a 20% share. But over the period, other members came in and they contributed 20, 30 rupees more. You, for some reason, could not match it. So your percentage comes down. That doesn't mean that you are bearish. It only means that other aspects, like the retail, like the mutual fund,
Higher participation.
insurance, have increased their participation.
Yes.
And the second aspect is that lot more the companies have grown faster because of this new money. In the last 5 years, Indian market, both in earnings and in market cap, has grown a lot. And hence the proportion of the benefit of the proportionate of this money is much more higher. In value terms, FIAs have
Hmm.
grossed down their investments into India. The bigger factor which worries me today is two factors, Maxie. One, we are painted a half picture. And I don't blame anybody, but in the world of social media and a quick news, nobody wants a deep dive.
Hmm.
Everybody wants a quick intake. So the print number of the FI is definitely high. But let's understand that this is a print number on a gross basis. Why it is gross basis? Because there's a lot of money which goes into IPOs and QIPs and pre-IPO, which are not part of this outflow. We need to subtract that to know the real outflow.
Okay.
That's the first part. I was reading a CLSA report which said that in the last 1 year, we saw a primary paper. When I say primary paper supply, it means QIPs, it includes blocks also, was 1.5% of India's GDP.
Yes.
Now that's literally 6 lakh crore. That's a huge number. And let's say if I was 25% of it and not more, then also 1.5 lakhs crores is gone there, which is what 30% of the all they have sold in last 12 months,
Hmm. Hmm.
right? So
Yes.
that brings a considerable number down. The second aspect, which I don't know how many of us realize, is there's a big book of FI, which we call the arbitrage book or the traders book. So there are two factors. One, there are lot many traders sitting in every part of the world, including India, who use the passive funds float and take an income out of it. There's a huge test with each bank back in Hong Kong when I was with MK more than 10 years ago. And each of them you had access to, like MSCI have a India index, right?
Yes.
Now there is a bank, let's say Barclays, for example. Barclays runs a MSCI index passive book, and they have investors who have put money. This shares don't get traded until as MSCI change the weight. So there are traders who use this float and some margin to make risk-free trades and algos around. What happens is when the NDF move, which is your hedging currency, or and when the interest rate or the bond yields move, their cost of trade moves. And because they are thin margin traders, every 10-15 bips movement in bond yields in US makes it tough for them to continue with the book. Over the last 3 to 6 months, we have seen slowly and steadily the bond yields in US are moving up in spite the interest rate coming down, which means that more and more unwinding in this book is happening. When the unwinding happens, they sell in the cash and they buy in the future, or they let the future expire. But they can't let it expire anymore because of the physical delay. So either they let both expire, which means the FI holding, what you mentioned, keeps coming down and you see sell figure. One example, the last month expiry, November, that day the FI sell figure was 11,000 crore. Net sell figure. There was no need for such a number. There was no sell off. It was just that either they sold the arbitrage portion of it. And the second aspect is that a lot of money has gone into options trading, both within India and outside India. So a lot of movement in the short term happen as the basis of the index basket and all that stuff. So looking at a cash sell figure in isolation doesn't give you the true picture. Added to that, over the last 2 months, the earnings were not good. The market texture both globally and in India was not great. India being underperformed, which means the hedge funds got an opportunity to be net short in India. They're trading short from hedge funds outside. That added to the sales. So there's something called hot money or quick money, and there's something called arbitrage risk-free money, and there's something called net long or long only money. My view is the third part of the money was not getting sold off. Yes, we didn't got the additional flow of it as you would normally get because the earnings were muted. So it brings back to the same point which I always highlight at the cost of repetition, that everything revolves around earnings in the market.
Absolutely. I mean, that's what is going to decide where the markets are going to be.
Yeah.
Absolutely.
So don't go by the flashing numbers of FI sell on media and stuff. There are more than 2,000 FIIs in India. They all have different strategies. It is very tough to decode the FII number. I can tell you that much.
It's good. I think so. So my worries on FIIs are completely, unfounded. I can see that.
It's not to the magnitude it's been
I understand.
published. Let me put
Absolutely.
it this way.
Yeah.